A war broke out this weekend in the Middle East between Israel and Hamas, and there's also allegations, of course, that Iran was involved in this somehow. The futures this morning were down off the dribble immediately, and now what do you see here? All green. Guys, all the more reason not try to guess what's going on. I was just at lunch, and a guy I know who runs a really big law firm came up to me. He's like, hey, Paul, your trade on treasuries, it turns out to be a really awesome trade. I'm like, I don't trade on treasuries. I just sit there and say my cash is now making 5.5%. Guys, I'm not trying to teach everybody here the process of try to guess what's going to happen next. This week is a very busy week when it comes to economic data, but it's not as a way of saying you should trade it this week or you should buy. I love it when I see on major news sites, oh, now's the time to get out of cyclicals and get into retail. Shut the F up.
Now's the time to move out of value and move into growth and vice versa.
Find good companies at great prices and buy them, whether they're growth stocks or non-growth stocks. Value investing is about valuing a company, whether it's going to grow 20% a year or 2% a year. You can still buy a growth company at a value price. So this week, what comes out? Well, tomorrow morning, the National Federation of Independent Business Owners releases their information at 9 a.m., which is going to tell us, hey, what are business owners thinking about the economy? There's a lot of talk since the yield inversion that happened almost a year ago now.
July 6th of 2022, I believe.
More than a year ago. That has been an indication of the last 8 recessions, I think, have been preceded by an inversion of the yield curve, but it usually takes 11 or more months for that to happen. Well, we're now at month 14 or so. So people are wondering, are we really going to have a recession? I have no idea. My bet is on we will, but my investing will not change based on if we have a recession or not. Now, I might be more aggressive if a recession hits and stocks fall a lot because I'll be like, listen, I'm going to take everybody else's fear and take advantage of that. And that's the position I want you to be in. So at 9 a.m. tomorrow, this report's coming out. Thursday, big one, CPI.
Yeah, everybody wants to know what inflation is doing.
What's expected to come out? Do you know what's expected to come out for these numbers? Guys, inflation is the big number. Why? Last week we had big jobs data that wasn't good for the market because it says that the economy is booming and the Fed wants to slow things down. So if inflation comes in higher than expected, people are going to be worried. They're going to be upset. They're going to sit there and say, oh my gosh, the Fed's going to raise interest rates, et cetera. And speaking of which, until Mo gets that information, the minutes for the September meeting are coming out this week. This will show people more in depth, more in detail what the Fed governors were talking about at their meeting in September. That's a huge thing. So they're expecting about a 0.3% increase in CPI, which is about 3.6% of the year. And that was also the previous reading. But remember, we want to look at core CPI. This is the number that the Fed talks about when they talk about a 2% target for CPI. Core means it excludes energy and food prices, which tend to be very volatile because they can change very quickly. Right, Mo?
Mm-hmm. So core CPI year over year, they're looking for 4.1%. The previous reading was 4.3.
Okay, so that's still a decrease, but still got a long way to go until they hit the 2% that they have said that's important to them. Right, Mo?
Mm-hmm.
All right. Friday, 10 a.m. is the preliminary consumer sentiment index. This is going to be important to see how does the consumer feel about the next 6 to 12 months. How are they feeling about spending money? How do they feel about their job security, saving, et cetera? Obviously, guys, consumers react to things. They aren't. So when I ever hear people say like, oh, go look at consumer sentiment before every recession when things were good. And guess what? Oh, we feel great because they're reacting to their job security. Just like when things are bad, they think more negatively as we start to come out of things.
Yeah.
This is a very natural thing.
Looks like a expectation is 67.2 and the previous month was 68.1.
So a contraction for sure. And that's, remember, the preliminary reading of this. Guys, the big news today is, the big news this weekend, first off, I ordered a fireplace for my new house. It was being built in Israel. And I just found out this weekend that Israel decided to have a little bit of a war. And so that's clearly not the most important thing as my fireplace. So, obviously, that's been a battle that's been going on for a very, very long time between those groups. And if Iran's getting involved, Iran has been an issue. I'm not trying to get political about it. I was born in Iraq. I'm from Iraq. Mo is sort of from Egypt.
Not really, but yeah.
He was born. Even your father wasn't even born in Egypt,
Exactly.
even though he lived there the majority of his life. Guys, it's going to be an unfortunate circumstance. The U.S. government has already, didn't Biden already approve funding for helping or something to help Israel?
I don't know.
Well, at least we're getting ourselves involved in multiple wars that are abroad. Oh, Mo doesn't agree.
Let's just keep giving our money away and giving our money away and never get it repaid. And Ukraine, well, why not throw Israel in the mix? It's cool. Don't worry about it.
Oh, God.
But you know what?
What's up, buddy?
You billionaires, we need to tax you more. We need to tax you more.
Pay your fair share.
Minimum 25%.
On what, though?
I know.
Last time I
No
checked,
common sense behind
if
this.
a billionaire sells their stock at capital gains, they pay well over 25% in federal and state income taxes.
Yeah.
This is a complete lack of understanding of things that happen. But either way, guys, who knows what the market's going to do week to week? Since September 1st, the S&P is down 4%. We have no idea. But what we're trying to teach on this channel is a process that allows you to make better decisions long-term and not be affected by the news out there that changes from week to week. Guys, I don't care how old you are. Our viewers range from 25 to 70. The big bulk of our viewers are 25 to 45. Some of you guys are younger, some of you guys are older. In your lifetime, go look at the NASDAQ, go look at the S&P, go look at the Dow in your lifetime. Then go back and look at the biggest events that occurred. Guys, bank failures, wars, terrorist attack, assassination plots, assassinations abroad, everything bad that can possibly happen has happened. And guess what? The markets go up over long periods of time because the U.S. economy and the world economy keeps getting better. If you get bogged down in the minutia every single day, you're going to drive yourself crazy. I laugh whenever I hear people ask me questions like, Paul, what do you think the current Fed? I don't know, and I don't care. If I buy a good company at a good price, eventually things will work out for me. The hard part about this is having the inner ability to be patient. To sit there and say, is this a lot of noise or is it really changing my thesis of this specific business? Very few things are going to massively change the thesis of your business. Very few things. Very few. Is it possible? Of course it is. Is it going to happen? Of course it's going to happen. But if you have a diversified portfolio of stocks that you bought for good valuations, you are likely to do well, but more importantly, you're likely to sleep better. So on this channel, I really want you to subscribe to us, but also, guys, follow me on Twitter. And the reason being is I really love having conversations with people on Twitter at Paul, and my last name is spelled like Gabriel, but pronounced Gabriel, at Paul Gabriel. Follow me there. Say hi. I love discussing things. Just today I talked about the 30-year average mortgage since 1971 is 7.74. We're currently at 7.47 based on my data that we have. We're still below the historical average. Guys, rates are about where they should be. And that includes early 80s, which had high interest rates of 15 to 18%, and recently with as low as 2.5 to 3%. It all averages out over long periods of time. If you buy a house, buy it because you want to live in it for a long period of time. Don't buy it hoping that rates go down so you can afford it. Go earn yourself some more money. Go learn better on our channel how to make better decisions financially. That way you're not going to be stuck having to worry about where interest rates today. What's going on with interest rates today? Mo, what's your interest rate today?
I know.
Now, I am doing a house right now where my interest rate's very low, and I'm really trying to make sure that I get this house done so I can lock in that interest rate. But it's 4.25 because I locked it in 16 months ago. So I'm really trying to keep that going. Different situation, because if I lose that loan, I got to get a loan at a much higher rate, which I don't want to do. That's a lot different than, I can still afford my house no matter what the rate is, but I prefer to pay less.
Of course.
And that's what's key. So guys, follow this account, follow me on Twitter. I appreciate your time. See you in the next video.